Hey, everybody. Thanks, everybody, for joining for the first coaching session of this month. Before I get started, I'm going to share a video from Al, and I'm going to share it right now, and then we'll get started.
Hi, I'm Al Brooks, and I want to congratulate you for choosing my Brooks Trading course. I've packed over 35 years of my hard-earned trading experience into this course. Your trust means the world to me, and I can't wait to help you succeed. By signing up for this course, you've taken a step that could change your life forever. My goal is to help you develop your trading skills so that you can make steady profits, which is the dream of every trader. But you must understand that learning to trade profitably requires a serious commitment and a lot of effort. The only way to get rich quickly is to buy a lottery ticket, but the probability is very, very small. Trading can be just as rewarding, but it takes time. You're here because you want to know what it feels like to be a successful trader. I totally understand that because that was my dream 35 years ago. I've learned the do's, the don'ts, and my course has all the tools that you need. But remember, you have to take it seriously and put in the hard work to make your dream come true. Along with the Brooks Trading Course videos, you'll find many articles, short videos, and audio clips on our website. These resources will help you master the art of trading. Plus, we've got a forum and social media groups where you can connect with other traders. And if you need one-on-one help, our team is just a click away on the website's contact form. To begin your journey, we've put together some short, easy-to-follow videos. They will help you focus on what's really important and learning how to trade. We also got extra services to support you as you progress. Thank you again for taking this big step toward your goal of winning consistent trading profits. I wish you and your family great health and happiness, and get ready for an exciting journey.
So, there's a few things before we really get started with all of this. And two of the things that really sticks out to me when I listen to that video is there's two things Al said: effort and commitment. Trading is an easy thing to become hopeful that one day you can figure it out, be profitable, and do whatever you're trying to do. And there's a lot of effort and energy that goes into figuring that out. And the biggest thing I'd forewarn with anybody is there's a lot of people who get involved with trading for to be a hobby. They want to be a hobbyist, if you will, kind of like golf. And they think trading would be a really fun idea to figure out, but they have no intention of truly figuring it out because they have no intention of putting in the work. These videos or this coaching session is really going to start with the groundwork. So I'm going to assume everybody today, obviously this isn't true, but I'm going to lay out the roadmap for what would I do and what would I tell everyone else to do if it was day 1 and you just purchased the video course today. It's day 1. How do you get started? How do you move forward? A lot of this is going to be talking through the course today. I'm not going to cover as much information. Now, I'm planning on the next session being Tuesday. So this class, it's going to start with the getting started videos, and then we're going to follow towards the next session. At the end of this class, I'm going to give everybody homework for those of you that have the video course to study in order to move on with the next class. So with that said, let's get started. And by the way, as far as questions go, please ask questions. And I want the questions to be related to studying the video course or Al's material, not questions related to price action. I'm only going to answer questions related to studying Al's information. And first things first, I want to lay out the groundwork of how these sessions are going to work. Every Tuesday at this time, 4 p.m. Central Time, 5 p.m. Eastern Time, I'm going to plan on having a coaching call, and I'm going to lay out, you'll get a topic list of what's going to be discussed for that class prior, similar to what you got with an email prior to the event. Now, the first thing I'll say is these are going to be, I'm planning to go through the entire video course. So let me pull up the video course for a second here. Here is what we're going to cover. My goal through this coaching session as the whole thing, I want to cover every one of these topics so you can see all the way from the first section, getting started, charting analysis, market cycle, support and resistance, how to trade, all the way down to the actual how to trade videos. Now, this is not going to be just stating what Al has already said in the course. Al has already done a wonderful job of explaining the video course. Therefore, there's no reason for me to show up and just explain what Al said in the videos. What I want to do is I want to take every topic in the video course and really explain it in further detail. So give examples, maybe give examples of recent charts from the E-mini. And this will be your time to get to ask questions related to that particular subject for that coaching session. So let's start out with getting started. The first piece that everyone has to do, and it's stating the obvious, you've got to finish the video course. So what I would do is the very first piece, watch the video course. Don't worry too much as far as how much do you retain. And by the way, yes, this will be recorded. And I'll cover binary decision charts, flow charts. I will cover all of that in the future coaching sessions, but it's not going to be right now. The first thing that you have to do is you have to get my pen here. You have to start with watching the video course. My advice, take the getting started section, watch it all the way through. And then once you've watched it, go back over it, take notes. What stood out the most to you when you take the notes? And in essence, you're going to do that for everything. So you're going to watch the starting out videos, take detailed notes over it. Then you're going to go to the charting analysis videos. You're going to watch them all the way through. And then guess what you're going to do? You're going to go back and watch each video again and take notes. And you're going to do that all the way down piece by piece. Your goal is not to learn the video course on the first time through. Your goal is to figure out the fundamentals of everything. So what I mean by that, your goal is to figure out the high level pieces. Assume you're going to retain about 10% of the information each time you watch it. Now, as far as these topics, what I'm going to cover is each bullet point here. So let's talk about the first piece, terminology. I cannot sit here and explain all the terminology videos. I'm going to hide my screen for a moment because I want to show something on my computer. So give me 1 second here. And again, I challenge everybody, ask questions. Here's a few things that you need to understand. And by the way, this is a lot of my notes I've taken from Al through the years and the video course. Now, overall, there's a lot to learn in the terminology videos. The most important pieces that I cannot stress are understanding that the market is either in a trend or a trading range. Now, for obvious reasons, because not everyone has the course, I'm not going to share that many slides. I'm really just going to share 2 or 3 of them. But right here, the market's either in a trend or a trading range. That is one of the biggest pieces. As far as the main terminology pieces that I would really, really focus on and challenge people to understand, there's a few things. One, understand that the market is in a trend or trading range. That's the first piece. Second, understand that it flips back and forth. The next thing to think about, minor versus major reversals. That's another thing to think about. Now, let me go back here to the video course. The terminology pieces are mainly going to cover high level bits and pieces of what's a major reversal, what's a minor reversal, what's a trend, what's a trading range. Now, let's talk for a second about chart basics and price action. The most important thing you have to understand regarding chart basics and price action is markets work all the same. A market is just a group of buyers and sellers coming together in search of a fair price. And as long as it's not thinly traded, there's a lot of liquidity, that fair price is going to be relatively known. And what that means is it does not matter if you're trading a 5-minute chart, a daily chart, a weekly chart, it is all going to be the same. Let me take a look at a few questions here. And just like right here, what's the difference between E-mini chart and stock chart for options trading? Again, if they're highly traded, if there's a lot of volume, it's not going to matter. The other pieces that I would say for chart basics and price action is a footprint of what the institutions are doing. So if we look at a chart, if we look at today, for example, we see all of this. These bars, when we look at price action as a whole, it does not matter whether we're looking at candlesticks or line charts. Everything is support and resistance. Everything has meaning. So if we go back to simple line chart and we look at a 5-minute chart of today, it's a spike, buy climax, sell off, test to the bottom of the most recent leg. This is all support and resistance. It doesn't matter if you look at a line chart. It doesn't matter if you look at a candlestick chart. You can look at a bar chart if you want. It's all the same. The price action was the same 10 years ago. And there's a lot of reasons behind that. You can argue that algorithms, AI, technology has changed price action, but it really doesn't make any sense because the reality is AI, all of that is built from humans and human beliefs. And because of that, it's all going to be the same. The only difference between technology and many, many years ago is that technology, computers have made things more precise. I'm going to kind of speed up a little bit here. As far as other pieces of chart basics and price action, again, the most important thing is to believe all markets are the same and they're going to behave the same. If they're thinly traded, then you're going to get more slippage, but overall, price action is price action. So let's scroll through here. And by the way, this particular coaching session is going to be a lot more about answering questions and really reviewing what I would do to learn all these pieces. We can get through a lot of ground in the getting started videos because while there's a lot to talk about, there's really a lot to talk about in the starting out and the personality. So video 8, these portions. But overall, there's not a lot to discuss as far as excuse me, there's not a lot to discuss as far as videos, the upper portion, but we will get more into it. So the biggest pieces, if you're trading Forex, it's the same thing. Whenever you're trading any market, you have to think about it in terms of, I'm not going to go into the details too much of Forex and what's a pip, what's a tick, or Forex sessions or leverage. But the one thing I will say overall is when you're trading Forex markets, What matters, with just like any market, is the cost of the transaction cost. So if you're buying or selling, you have to factor in what is the cost of that particular trade. So let's skip down and talk about setups. When I'm trading, the way I trade is I have a chart and then a matrix. And I keep it that simple. I do not have all these charts in front of me. This is the E-mini, and I'm relatively aware of what the E-mini is doing. I'm aware of the daily charts. I'm aware of the higher time frame. I'm aware of the 5-minute chart. But overall, this I have a chart to my right and then a matrix, and I just enter orders based on the matrix. I think one of the biggest mistakes traders make is they start looking at too many time frames and they have no idea. They start to get analysis paralysis when they're trading. So because of that, what I recommend, and when I say matrix, I mean a price ladder. So I'm going to turn my screen off for a second. Let's just build a chart. So give me just a second here. A matrix is a price ladder. Okay, so here is a typical setup when I'm trading. I've got a price ladder and I've got a chart over here. And if I'm trading the E-mini, this is typically what it looks like. And what I'll do is I normally hide the volume and then I use these buttons to really place orders. If I want to buy, I'll just click buy stop or I can click market order. That's how I place it. Now, as far as my setup, one of the things I always do is I always have an OCO in the market. So if I am going to, let's say I'm going to place a trade. What I'm going to do is, oh, that's right. What I would do when I enter an order, you will always see an order sends order. So if I buy, there will be a stop in the market and a profit target in the market, both, and that's automatic. So always attach an OCO to your orders. But this is what I look at, and I keep it relatively simple. I don't want to see a bunch of charts. I don't want to see a bunch of indicators. I want to see the moving average and then the chart in front of me. Let's go back to this. Now let's talk about program trading for a minute. You can make an argument that the only thing I would worry about with program trading is the fact that more than 70% of the volume is going to be controlled by computer algorithms, probably far more than that. And because of that, while you can argue that you're not going to see all the volume, and that's true, the reality is there's a footprint behind the institutions, and you can see it on a chart. Let's talk about personality traits of successful traders. This is probably one of the single most important videos in the getting started section. And this is probably this is probably the single thing that damages trader success is doing stupid things and being comfortable with uncertainty and certainty. So let's look at a chart and let's talk about that. We're going to talk again, this section, the getting started pieces, this is more going to be about psychology and emotions and really how to get started with learning the video course. When we're a month in to these coaching sessions and we're talking about the market cycle, we're talking about always in, we're talking about breakouts, how do you enter on breakouts, how do you take profits on breakouts? Those are going to be far more technical discussions, but we have to start somewhere, and I want to start in order of the video course and build on it. Now, I think one of the worst things that traders do, if you've been in the room and you've listened to Al for any period of time, you've heard him say it: stop doing stupid things. And what he means by that is stop taking trades that have bad risk reward and bad probability. Now, what's a stupid thing? Who can tell me when you're trading? What's one of the dumb things that traders do all the time? I'd be curious to see in the comments. What's a dumb thing? And by stupid thing, what are those things that traders do that they know they shouldn't do? Dumb things in trading: you sell, you scale in, you never get out, you scale in, never get out, and you just get killed. So, the number one thing: shorting in a bull channel. Absolutely, shorting in a bull channel. Another dumb thing that traders do, and I use the word dumb. When I was listening to Al in the trading room, he was always kind of blunt about things, for lack of words. And he would always say, don't do dumb things, don't be stupid. And obviously, you have to tease yourself a little bit in the sense of nobody's stupid, nobody's dumb. So don't take it with a grain of salt. Don't take it personal. But if you do something dumb, end the trade and get out. The next thing, the other thing that people do, let's talk about probabilities for a second. Probabilities, we're going to get a lot into probabilities. This is just, as far as the getting started videos, it's kind of just a lot of things at once that I'm talking about. And in each one of these weeks, I'm going to talk a lot about probability in the upcoming months, but it'll be later on in the course. I think one of the dumbest things that traders do is they don't think enough about the trader's equation. So here's a simple spreadsheet. And if you're in Discord, you've seen me you've seen me talk about this spreadsheet. If you're in the trading room, I've shared it on Discord. And if everybody wants it, I can share it again. But this is a simple explanation of going for 1 times your risk and going for twice your risk. Everybody wants to be Al. They see this up here and they think, okay, if I can just have a high probability, I can scalp. But they underestimate how difficult it is to have a high probability winning percentage. So what this explains is reward, that's what you're going for. Profitability, that's how profitable you are. Loss, that's your loss. And percent risk is your risk of losing. So it's the trader's equation. So probably this is your success times your chances of success minus your loss times your percent chance of losing, which equals the return. One, you can think about it as $1. You can think about it as 1 point. But the biggest piece with this is traders naturally, they gravitate towards scalping because they don't want to lose money. When you're trading, it's all about probabilities. A great swing trader can win 40% of the time, let's say, and do pretty well. Give me just 1 second here. So let's look at these 2 examples. Notice that a 1-to-1 risk reward at 60% is 2. A 2-to-1 risk reward, and what that means is risking $1 to make $2, risking 1 point to make 2 points. At 40% is 0.2. 0.2 is basically minimum wage. It's the minimum needed to not lose money. Now, nobody here is trading in order to not lose money and make just enough to make a profit. That's obviously not what everybody's here for. And because of that, you have to find a way to increase this column. You can increase it by getting higher probability, so raise your probability, or you can increase your probability down here. But the point is, I want everybody to focus on this one down here. Why? If we can increase this by 5%, the reward almost doubles. Here, let's increase this by 70%. Your reward does double. But having a 70%, being profitable 70% of the time is actually fairly difficult. And again, this is points. So don't think about it as risking $1 to make $2. It's in terms of points, or give me 1 second. It's in terms of points. But overall, focus on this piece down here. Increase your probability and increase your probability in swing trade. The worst thing people do is this right here. They start going for half their risk. And what they don't realize is how difficult it actually is to be profitable. So even if you're 80% profitable, you will break even. So I'm curious, what are some other mistakes that traders make? I'm going to look through the comments for just a second and read through some of them. Someone said over trading. That is a great example. And a lot of the reasons traders overtrade is typically they overtrade because of emotions. They don't have a game plan. So when you're overtrading, a lot of times it's due to either traders taking a loss in the morning. They maybe they sell below a bar or they buy above bar 1. They get stopped out maybe below bar 1 and then they end up selling below this bar. They end up buying here, but by the time they buy there, maybe they scalp out. But overtrading is a very, very common situation. So I'm looking through more questions here. Trying to find bottoms. That's a great example of some of the things that traders do. And we'll talk more about that. That's going to go into the market cycle section. One of the worst things that traders can do is when you're in a tight bull channel, they start looking for reversals. And the reason they start looking for reversals is they don't understand the probabilities behind something like this. It takes a long time for something like this to reverse. So that is a very good one. Not placing stop losses. Big, big mistake that traders make. One of the reasons you have a stop in the market, everybody's heard it. If you listen now, you've heard it plenty of times. The reason you have a stop in the market is to protect yourself from the market. And because a lot of times, if you at least have a stop in the market, worst case, maybe you get stopped out up here. You take a bigger loss than you want, but at least you're out of the market and you're safe. Doubling down on losing positions. So another person says, doubling down on a losing position. So what does Mike mean here? Whenever you're scaling in, one of the things that traders should do as far as scaling in goes, only scale into winning positions. And then when you're really confident and you're consistent in what you're doing, then you can think about scaling into a losing position. But scaling into a losing position is really dangerous because typically what traders inevitably will do when they're scaling in, they'll scale in against a strong trend. Oversizing, that's another really, really big issue that traders have. And all of that comes back to your original game plan. So let's go down for a minute and talk about starting out. When you're starting out, there's a lot of false beliefs that traders have. Who can tell me what are some of the false beliefs that traders have? I'm going to give that a few seconds and then I'll start reading through them. So, what are some false beliefs that maybe you have or traders have? Get rich quick. Okay, a lot of people saying get rich quick, trading's easy. There's a secret setup. So, trading is easy. You know, in the years I've been studying now and for those of you who don't know me, I started studying Al back in around 2013. So it's been over 10 years at this point. And I was fortunate enough, I was in college when I started studying Al. And what's funny is when you're in college, you're surrounded by, 19, 20-year olds. Everybody's young and naive about the world. And I remember probably my junior year of college, I'd be studying Al, I'd be in the trading room pretty much every day from 8:30 Central Time till the market closed. And what irritated me so much is the older I got, when I started, when I was 20, when I was 21, everybody starts getting involved and interested in trading and markets, and they think it's fun, they think it's cool. And everybody would tell me how easy it is. But when I look back over the past 10 years, All those people that were telling me how easy it is, they stopped talking about trading at this point. And most of them, the reality is they thought it was easy, but they never had the intention of learning all the pieces. If trading was easy, then obviously we all know that everybody would be rich and profitable. But the reality is that's far from true. It's actually not possible for it to be easy. If you think about trading, in order for trading to be easy, that means that one side has to not know what they're doing. If we look at a market, do you really think that when the market's going sideways here, we know that there's traders selling, there's institutions selling, and there's institutions buying and scaling in lower, and both are making money. Goldman Sachs is trying to take money from JP Morgan. JP Morgan's trying to take money from Bank of America. All of them are very, very smart traders. And because of that, we all know that the probabilities are very close to 50-50, and they're in a band. Sometimes they're closer to 60%, sometimes it's closer to 40, but most of the time it's real close to 50-50. Secret setups, that's a false belief. Everybody wants they want a god or a golden goose to save them from their trading woes. And we all know that's simply not true. Look at any chart that you look at has to do with context, support and resistance. Are there more buyers below or sellers above? There's no secret setup. And one of the reasons, if you look online or you look at webinars, you'll see people sell secret setups. The reason they sell them is because they know that people will fall prey to wanting the easy road. The easy road in life typically doesn't get you anything. And if you want to become a professional trader or figure out things, figure out how to trade, it's a lot of work and no one's just going to hand it to you. The reality is, if I had a secret setup that truly, let's say every trade it worked, do you really think that I would give it to everybody else? Of course not. And we also know that because markets operate the same way, and for every trade there must be a buyer and a seller, there is no way to have a secret setup. I can be profitable in a few months. That's a false belief. And that's everybody's hope. When I was starting out 10 years ago, 15 years ago, my belief was I could figure out everything in the video course and in the books in a year, or at least figure out enough to be consistent. And I was very, very, very wrong. And what I would say with that is you are trying to be the, you're trying to compete in a world of professionals. And these professionals, they study every day, they work hard at what they do, and they're very good at what they do. And they've spent years and years and years. And you're also, not only are you trying to learn how to trade, you're trying to catch up to their experience as a trader. And that takes a very long time to get there. Now, one of the ways you can shortcut it is something like the video course. And the number one thing I would say when Al says beginners should focus on swing trades, focus on 1 to 3 setups a day, take that for heart. The reason why Al says that is this down here. If we can get to 40% profitable and go for twice our risk, we can be profitable. But trying to figure all this out, trying to be 70% profitable, risking 1 to 1, it seems easy, but it's not easy at all. More discussions on getting rich quick, being profitable quickly, all of that is not true. I really like this one. The markets owe you a living. That is just that kind of gets into revenge trading, or, surely the markets will be friendly to me. The markets don't care about you. And we all know that. This gets back into that whole everybody has a false belief, or they want something to save them from the market. And they want the market to be kind to them. But the market, you're irrelevant to the market. If you think about the volume, then look at GameStop. Look at GameStop when it gapped up, went back in COVID. If you look at any of these bars, look at a 1 minute chart of Apple, the volume's incredibly huge. And we don't see all the volume on this chart. So it's thinking that the market cares about an individual like me is total nonsense. Thinking that the market cares about an individual like you is total nonsense. we're smaller than tadpoles in a pond. So more discussions about the markets owe you for living, quick bucks. Those are really good points. False beliefs. Let's take a look at some of them. Most of you got it right about false beliefs. And if we just highlight a couple of them, what I would say is, let me go back to here for a second. When we think about false beliefs, a lot of them are going to have to revolve around perfect trades and that there's a best time to enter. So let me get this back over here. So overall, there's no perfect trades. There's no convenient time to enter. Everything is about management with the trade. And again, all these videos down here, we're going to cover all of that in detail. So what do you do with trading? What's the most important piece with trading? Who can tell me? What's the most important thing when it comes to trading? When you're looking at a chart? Someone says, and while I'm waiting for some answers, someone says, I'm curious because Al says institutions use line charts. Institutions use everything. They use line charts, they use bar charts, they use context. Are they looking at candlesticks? Some might be, but what they're looking at is support and resistance. If we look at any chart, let's go back to here. So I talked about Boeing today in the trading room. And when I look at this chart, what do I see? I see a tight trading range, big sell off, a sharp reversal, trapping a lot of bears who sold down here. But you don't need to see a bar. You don't need to see a candlestick chart. You could see this on a line chart. Parabolic rally, bears made money, selling above. It's a trading range. All of that can be seen on this chart. Risk management. Someone says one of the most important things is always in. Market cycle. It's closer to market cycle. One of the most important things is what is the big picture? Understanding support and resistance. The market cycle can be defined really with support and resistance, and we'll cover a lot of that in the future. Now, what about chart types and timeframes? Who can tell me what the most important time frame is in front of you? Or let me back up. Who can tell me what the most important time frame is on any chart? Does anyone have an idea? The most important time frame. Daily. Hi, there we go. My trading time frame. And I kind of hinted and gave it away earlier. The time frame that is most important is the chart in front of you. Now, that doesn't mean just because you're looking at a time frame doesn't mean you can trade the time frame profitably. But if I'm trading a 15-minute chart, the 15-minute chart is the most important chart in front of me. It is the chart that is in front of you that should guide your decisions. So what about types of charts? Are 5-minute, are time charts more important than tick charts or volume charts? What do we think? Who can tell me whether or not time charts or volume charts or tick charts are the most important? Doesn't matter. That's exactly it. For me, I like time charts. And part of the reason why I like time charts is I want to look at a market and be able to just flip to that chart and not have to think about whether I'm looking at what's the right volume, what's the right tick chart. There's nothing wrong with them. I go to crude oil. I just want to be able to look at crude oil. And I don't want to worry about if I'm looking at a 15-minute chart, crude oil, and then maybe I want to look at gold or the E-mini. I want to look at the E-mini on the Globex. I just want to pull up the chart and see it. That is why I use time charts. Now, there's nothing wrong with any other type of chart. So, how do you start out with trading? Well, the first piece is you've got to finish the video course. Like I've said, there's really a lot that goes into, everybody, one of the other false, I would say, beliefs or misunderstandings that traders have is they think they can just pull up whatever chart is in front of them. They think they can just watch the video course, go through it once, and then in a month I'll be ready to trade. Not exactly true. There's importance to having trading experience. And that benefited me a lot is being able to study Al and be in college and really study and be able to trade, paper trade the E-mini and learn. However, the real work is put in studying the video course and thinking about the information. Now, overall, as far as emotions, fear and greed, uncertainty, a lot of really good traders can actually use their emotions to better understand what the market is doing. And if we think about that, that kind of sounds backwards because are emotions good or bad in trading? Who can tell me? What are people's thoughts on emotions when you're trading? Good or bad? And is it possible to use emotions in a way that's beneficial for when you're trading? Jeremy says emotions are bad. Everyone says emotions are bad. Not useful, good, bad, they're neutral. It depends on the trader. So a really good trader, I've had a conversation with Ali Afshari, who studied Al for over a decade. He participated with Al in the Orlando event last year, or not last year, in 2022, at the end of 2022. And I had a conversation with Ali a while back, and he stated it in a really interesting way. And he said a professional trader like Al, someone who really understands a chart extremely well in a discretionary way, they're like an artist with a paintbrush. They trade based on their emotions. And their emotions are they're so in tune with the market that when they can sense momentum, they can sense uncertainty. That's why you hear Al talk about uncertainty. When the market's uncertain, it's in a trading range. When you feel urgency and you feel like you need to enter the market, when you feel the urgency, you can buy. Now, the problem is if you've only been studying trading for a month, you're not going to have the right sense of urgency, uncertainty, all those pieces. So, the first piece with emotions, throw all emotions out the window when it comes to trading. Your experience will help redevelop your emotions into truly understanding what the right thing to do is. And as far as fear and greed is nonsense. Everything has to do with risk reward and probabilities. It's the trader's equation. But you can learn to use your emotions to benefit you, but that takes a very long time. Someone asked earlier, should I review the day? You should absolutely review the day. And what I would challenge everybody to do down the road is learn how. Let me just close this really quick. Give me just a second here. I would challenge everybody, learn to start building charts, making notes on things. And we'll talk far more about that here in the near future. So scrolling through some of the comments here. But the reality is emotions, when you're trading, when you're a discretionary trader and you're looking at a chart, the reason why traders use their emotions, especially once they've had a lot of experience behind them, is it's a radar. It's a radar telling them what to do. And it's a fast way for them to react and make a decision with the market. And the reality is an institution, a computer algorithm, you cannot put emotions into a computer algorithm. Therefore, saying that the market's greedy, so it's going to sell, so it's going to pull back, or, when there's fear in the markets, you should buy. It's total nonsense. The saying's true. The market's been in a bull trend on a monthly chart, so if it's going down, sure, you should buy, scale in lower. It's kind of like, I'll give everyone a pop quiz. What does Al say the single easiest thing to do to become a profitable trader? And everybody can do it today. Who can answer that? If you've studied Al for long enough, you should know this answer. There's one thing you could do starting today, and you would have an extremely high probability of being profitable in this month. Someone just got the answer. Buy on a yearly and hold. Exactly. Why? Because the market's in a bull trend on the yearly chart. So if you buy 10% lower, 20% lower, 30% lower, you're going to make money. And everybody knows that. Now, when you start dialing down to smaller time frames, that's when it gets a little bit more and more difficult. Hold long term. That's exactly it. That's a very, very good point. So I'm reading through some of the questions here. Overall, very good questions. And again, if you haven't asked any questions, do ask questions. Asking questions is how you learn. While people are asking questions, I want to discuss one thing that I would do a lot when it comes to studying Al. When you're reading his books, when you're watching the videos, go back in time. So most of the video course was created between 2015 and 2017. So when Al had a chart pulled up over here, I would pull up the chart on TradeStation. I would find the year, pull it up on TradeStation, and follow along. When you read his books, do the same thing. And it's really important. This is another conversation I had with Ali a long time ago. And when Ali said when he was studying many, many years ago, 2013, 2014, way back then, he would ask Al a series of questions. And occasionally Al would tell him he's got to think about it. And the reason behind that is a lot of trading. When you look at traders and you start studying all the people that are studying the Brooks trading course, the most successful traders out of the bunch are the ones that are they're analytical, they're thinkers. And I think one of the most dangerous things people do with the video course and with Al's information is they take it and they don't spend enough time really thinking through the information, looking at a chart and really thinking about it. They want the answer right now. A chart is like melted plastic. Patterns will look similar, but they're not going to look the exact same. So you have to understand the logic. You have to understand why a high one operates like it does, why a low one operates the way it does. So the other thing I would tell you guys is to be critical thinkers. When you're looking at a video, and let's say you pull up the chart basics and analysis and you start watching this video, really spend time thinking about it. Don't worry about I need to watch 8 videos a day or 10 videos a day. Focus on watching the videos, and if you feel the need to go back on the video and really think further through it, think about it. Okay, so let's see some other questions here. So what broker should I use if I'm starting out? Use a broker that's well known. If you're in the US, there's Interactive Brokers, you have TradeStation, TradingView, there's plenty of them. But use one that's relatively well known. They're all going to be fairly competitive, and that will get you going. Now, what market should I trade if I'm starting out? Most of you know, I talk a lot about the SPY. I think the SPY is probably one of the single best markets to use starting out. And the reason is if you can get over the pattern day trading rule in the US, in other words, if you can, I think the pattern day trading rule is $25,000 in the US. But the benefit to the SPY is these days, it's pretty much commission free trading. So other than the bid ask spread, you have commission free trading and you can trade one share. And the benefit is if you're trading and you start to realize you're in a bull trend, you can just buy one share. You can buy 5 shares. Put your stop down here. Maybe you buy in increments on the way up, but it can teach you how to swing trade. The one thing I would not do is trade the E-mini. You can trade micros, that's fine, but I am a huge fan of trading the SPY because you can really, really control your risk. The other thing, Forex markets. Forex markets are a great way to trade. I am not too big of a fan of a 5-minute chart with Forex markets, primarily because of the cost of the transaction cost. I'm a really big fan of 15-minute charts, 30-minute charts, 60-minute charts, 3 big bear bars, sell, scale in for a second leg, trading range. Even if you're, even if you're selling all the way up here, or let's say you're buying here, you can trade. I mean, you can risk pennies on Forex and trade a 30-minute chart. Why not the E-mini? Well, when I say the E-mini, I really mean I trade the micros if I'm going to trade instead of the E-mini. Gold, great market to trade. Crude oil, great market to trade. The one thing I would say is trade small. Your goal when you're starting out is not to be a hero. Your goal is to do the right thing and learn how to trade. In other words, your goal is not to be a superstar or a rock star in the first 5 minutes of your trading career. And I would assume that you're going to have a really tough time. And when I say that you're going to have a tough time, it's going to take longer than what you think. Now let's talk for a second about learning. One of the other benefits you can have is, and again, I'll talk more about writing up charts. I'm going to talk about for those of you that have the video course, and again, I don't want to go too much into it because not everyone here has the video course. But if there's a video here about the steps to finding today's trades. So Al created a video that talks about the steps to finding good trades. I'm going to talk more about that in detail. I'm going to talk about writing up, marking up charts, all those things. Now, one of the things I want to mention is when you're trading, I remember back in the day, I would get beyond upset. I mean, just very emotionally upset when I'd have losing days. And it's not when this is really a few years into studying now. It wasn't the first week or the first month or the first year because I knew I didn't know what I was doing. But when you're 2 years in, 3 years in, especially when you're 2 years in and you start studying and you want to, you obviously want to be consistent and you're not being consistent, and then you do really poor. Those were really emotional times. One of the greatest benefits I learned is I'd make a mistake, and I remember it got to the point where it'd be 3 o'clock my time, so 4 o'clock Eastern time, and Al would do his review. I'd be so emotionally upset about the day, and I couldn't think about it. I didn't have any idea what I did wrong. Everything was terrible. I was mad about the day, and I learned a really good lesson. It got to a point where I just had to shut my computer and I remember just had to lay down, and I didn't want to think about trading. I didn't want to, do anything with trading. And then about 5 or 6 hours later in that night, I pulled up the chart and I just started thinking and I started looking back at my notes. And I said, all of a sudden, I said, wait a second, I bought right here and it's the top of a trading range. So that's a bad area to buy. Or, I bought a really big bull bar, but I bought at the top of after a tight bear channel. I'm buying high in a trading range. Maybe that's the problem I'm having. And then I started looking at other losing trades and connecting the dots. So your losses can be really a blessing in disguise if you really think through what you're doing wrong. So never get emotional. And then I learned through time that when I have losing trades, there's a reason. Most of the time, and we'll learn this talking through the video course. We'll talk about this more in detail. Most of the time, there's always a percentage chance you're going to lose on a trade, but a lot of the trades, they don't perform well when you think they should. They're usually due to some form of human error. So some error on your part. but we'll talk a lot more about that in the future. So, a few things I would say. What's an action? I'm all about an action plan. So, what's an action plan going to into tonight and tomorrow? The number one action plan, if you don't have the video course, you got to get the video course. And in about a month from now, and maybe in a few weeks from now, uh, this is only gonna be available to people who have the video course at a minimum. But point is, watch these videos. Rolling back up, watch the getting started videos. That is homework for next week. That's the first piece. So overall, with starting out, watch the videos. Understand that it's going to be a challenging road. The other thing I want everyone to think about is I want everyone to really think as far as why do you want to be a trader? One of the interesting changes I realized through my trading journey, when everyone starts out, I was no different. You want to trade and you want to figure out trading for the money. And everybody's in it for the money at the end of the day. But at some point, what I've noticed is the traders that really figure it out and make a lot of progress and really eventually get to the other side of being consistent. What I've noticed about those traders is it's more than monetary. There's something driving them to the finish line. If you listen now, for those of you that were in Orlando, and this was the first morning of the Orlando event, everybody was around Al. People were talking. I think it was breakfast time, and Al mentioned a bar that happened on the prior trading day, and it was a bar that it rallied. It went up, several points in a matter of seconds, maybe 10 seconds. And so he talked about how he bought a pullback with a limit order for a second leg up. But the point is, you could tell the way he was talking about it, he was so fascinated by this one bar out of a span of 81 bars. He was far more he was fascinated by why it happened, and he talked for a while about why it happened. The reason I bring that up is you have to have a love for price action. You have to want to understand price action to a really deep level. And if you're in it for just the money, most of the time, what I've noticed I would argue others would say the same thing, is the people that are just in it for the money have a greater chance of moving on to the next thing that's going to make them money. So if I'm only interested in just being, financially better off of trading, then and there's no real enjoyment, there's no passion towards trading, there's no excitement towards it, then what's going to happen inevitably is someone's going to come to me about some idea, and I'm going to get excited about that idea because it can make me money, and I'll stop trading. So you really have to be committed to price action. And I've noticed that takes a couple of years. Once you really start learning the video course and you start studying, then you start to learn more information. And one of the most exciting things is when you can start looking at a chart and you can start marking it up and you can really start understanding all these little pieces. So let's talk for a few minutes about why am I doing this? What's the point of these coaching sessions? These coaching sessions are not to replace the actual videos. As surprising as it sounds, a lot of people out there, they have trouble following through with watching the video course. The video course, let's do the quick math here. It's 121 videos, 59 hours of fundamentals. So we got 59 hours here. We have 33 hours here. So let's just round it to 90-ish hours. And then we have 10 hours here. So we have 100 hours of video information. That does not include the Forex portion. So one of the reasons why I really want to start this coaching program is I want to push people through with following through and getting through the video course and really, really spending the time to study. This is not going to be, this journey is not going to be something you're going to learn in a month or 2 months. It's going to be years and years and years and years. But every year that goes by, you're going to learn more and more. Now, when I say years and years and years, what I mean by that is you're always going to be learning and improving your journey with trading. And because of that, that's kind of the magic behind trading. You start to see all these little things. And the longer you trade, the more you start to understand the higher time frames and how they connect with the lower time frame. You start to realize, when you see Al and he has all these things marked up, he always talks about the high of last week. And it almost seems that he can point out where the market's going based on a higher time frame and how it stalls there. And that's just something you start to see through time. So let me look through some questions here. Now, real quick, let's talk about next week. What are we gonna cover? Next week, I'm gonna cover more in detail with I think the first thing I'll probably cover is the market cycle. This will be another section. So I'll probably cover the market cycle videos over here. So for next week, I'm going to cover next Tuesday, same time. I'm going to go in detail with the market cycle and how it operates. So something to think about is everything's connected. In order to understand the market cycle, I'm curious, while I've got everyone here, what's the single most important thing you can understand in trading? It's one word. So what's the single most important thing you can understand with trading? It's one word. Who can give me that answer? It's not context, but context is true. Different word. Direction, not quite. Breakouts, there we go. So Chris, great job, Chris. Although the chat's moving too fast, I can't really read it. Breakouts are the single most important thing you can understand. One more little pop quiz for you. Do you think the majority of so if you had to, yes or no, do the majority of bars breaking out or not breaking out? Who can give me that answer? So out of 81 bars on a chart, we're looking at this chart, how many bars are breaking out and how many are not? So we have a lot of no's, a couple of yeses. Give it a couple more seconds here. So it's actually most bars break out. The majority of bars on a chart break out. Now, in order to understand that, there's only one type of bar that's not breaking out of a chart. Who can tell me what that bar is? It's not a doji, it's not a trading range bar, but there's one type of bar that's not a breakout bar. And if I had to guess, there's probably 8 or 9 of them on a chart. Inside bars. Great job, Jonathan. So Jonathan says it's an inside bar right here. Inside bars are the only bars that are breaking out. Now, what we have to understand, and this is what we'll talk more about next time, is the market cycle and context. Every bar, price going one tick below a bar and above a bar, it's a breakout. So it's our job to understand the overall context of breakouts. Let's look at a few questions here. Great question. How do the books fit in? So there's 4 trading books, and Al's working on writing another one that is in the process of writing, that is covering all of his encyclopedia of chart patterns. And let's just do a quick review of all the material. So there's a lot of things to cover. You got the video course, you have the books. Let me find them real quick. It's over here somewhere. We've got the books. The audiobooks are really great. I have the audiobooks. I really like it. Great way to also study. Here's all the books. This was Al's first book. These are the volume series. The volume series covers everything way more in detail. So if you think about it, you had the blue book, reading price charts bar by bar, then the 2014 video course, or really, then you had this, then the 2014 video course, then this current video course, which is here. Then we had the encyclopedia. The encyclopedia, great thing to study. Now, the one thing I'll say about the encyclopedia is this is not everybody always assumes that the encyclopedia, if they just memorize the slides, all of a sudden they'll be profitable. It's not true. You need to understand the video course first. Then you start to understand how to use it. So we'll talk more about the encyclopedia down the road. Now, let's go back to the books. How do we use the books? We use the books after we've watched the video course. So to me, I like the books because it is going it's further in detail, and there's more examples of using the books. So there's more examples from price action. However, if you look at the video course, it's going to be the same material, but you're going to cover more ground with the video course. So I would start there first. How many Tuesdays or weeks are you going to schedule webinars to complete the video course? I have no idea how long it's going to take. My guess is 6 months. So, but I'm planning on having video sessions every Tuesday. Now, granted, there's going to be some week where maybe instead of Tuesday, it might be a weekend, but you will have advance notice every Tuesday. For now, there's going to be a session on the webinar that's going to cover something about Al Brooks. It's mainly going to be the video course right now. And what you have to remember is this is just the getting started section. So when we're talking about the getting started section, it's really just these videos. And it's only 5 hours. So there's not a lot. There's a lot to cover here, but a lot of it can be learned on your own. So what's the most important things we can figure out here? One, you got to understand the terminology. Volume and news. You can use volume, but the reality is you don't have to trade with volume. I don't use volume. The reason I don't use volume is I don't know how to use it. And everything I can see on a chart, I can see it. So what's the point of seeing, with volume? News, we all know it's not that important. There are pieces of news that are important, but anything on a chart, anything that happens, you'll see it on a chart. So when we have a big news event bar, guess what? You're going to see it on a chart. You can respond accordingly. The other pieces, what I really want people to think through is this video right here, video 6. That is going to be the single most important video on this chart. Now, what I'm going to do to answer your question is go through every one of these topics all the way down. When we start getting to here, there's going to be a lot of discussion here, the how to trade portion. There's going to be a lot of discussions here. There's going to be a lot of discussions on the prerequisite. The getting started is kind of like you got to have the right mindset and understanding of trading. It's hard work. You're going to have to put in the hours. You're going to have to study. Nobody's going to hand it to you. We all know that. That's the first piece. But this will be every Tuesday going forward. The recording will be shared on Discord. So I'm looking through more questions right now. Can we take time to explain the concepts in the video? Well, again, when we start getting closer towards the market cycle, for example, what's the market cycle? There's 4 parts to a market cycle. Next week, I'm going to talk a lot about what those four parts are and how they tie together. And pullbacks, I'm going to talk a lot about pullbacks. Channels, how do channels become trading ranges? I'm going to show a lot of examples with that going forward. Now, the one thing I'm not going to do is I'm not going to pull up the market cycle slides and just go slide by slide and talk about it, because the reality is Al's already done that. So there's really no point in doing that. But I am going to I'm going to show a lot of examples and concepts from each video, starting with those bullet points. So starting with the market cycle next week, you are going to get to see recent examples of the E-mini as far as the market cycle goes, marked up charts. Now, for homework, I want everybody, if you're going to watch next week, I want everybody to watch the market cycle videos. So if you don't have the video course, go ahead and get it. It's not that expensive relative to the amount of videos. And then start watching the market cycle videos. So let me look through some more questions here. Does anybody have, so what questions do people have regarding getting started? I'd be really curious to hear that. Does anyone have, is there, what trouble or questions are people having with getting started? Rose mentions the homework is to watch the market cycle videos. That's exactly it. Start with the market cycle videos. So again, what challenges are people having with getting started? Someone says they're 2 years into trading and still part. Is 2 years into trading still part of getting started? Well, I mean, sure. The reality is once you start, the first thing you have to do is just start. A lot of people, they have trouble with just following through and getting started. And what I would say to that is, congrats, you're 2 years into it. So all you have to do is just keep moving forward. So let me take a look here at some more questions. Bill says, I'm going to watch the market cycle and watch it next week. Yeah. And I'd love for people to watch the market cycle 2 or 3 times before next week. That'd be a wonderful thing to do. So, market cycle is going to be next week. Question: while studying the course, is it recommended to start trading the patterns learned from the course, trading micros, and not until we finish the course and practice? Well, again, I would like everybody to at least, ideally, I'd like everyone to watch the course at least once before trading live. And the reality is, you're going to watch this course several times. So it's not like you're just going to be watching it once. Do you need to study the whole course to start swing trading? Well, Gene, it's kind of, this gets back into the topic of trading is one of those really interesting things, because when you start a business, let's say I'm going to go start a coffee shop. Well, every sale that I have is one step closer to being successful. And if I sell one coffee on day one, hey, at least I sold one coffee. Now, how do I go sell 10 coffees or 20 coffees? How can I do more? The problem with trading is you're either profitable or not profitable. There's no like halfway through or 50-50. So what I would tell you is you need to study the whole course. And I would become if I was starting out tomorrow, what I would do, I would be obsessed with learning the video course. That's the number one thing I would do. And there will be a time for experiences and learning from mistakes, but a lot of mistakes can be answered in the video course. Now, what I will say, you have the second part correct. Should I start swing trading? And that is something I'm going to cover a lot in detail with Always In. Everybody should be swing traders. If you want to be a great scalper, you have to become a great swing trader. And the reason for that is you have to understand the difference between a major and minor reversal. But I would start with watching them. What does Al consider as swing trading as more than a scalp, or is he just saying beginners should swing more than a day? Not exactly sure. If I understand your question correctly, most traders should focus on swing trading. The reason why Al says most traders should focus on swing trading is because scalping, you'll inevitably screw up scalping. And a lot of traders, they'll screw it up because they don't know what they're doing. And by swing trading, you have to understand, a scalper is just taking quicker entries based on the always in position. Sometimes you're in a tight trading range and traders are trading with limit orders. But if you look at any chart, swing traders overall are buying here. Scalpers, they might be buying with limit orders below bars. They might be selling above a bar like 13 because the odds are you're going to get a small second leg down. And the swing trader might be holding through that. That's really the only big difference. So let's look through some more questions here. You should talk a lot about market cycle in the trade room next week also. Yeah, I try to, and I'll try and be more aware of it. But market cycle really is all about context. So let's see here. Again, I'd love to see questions about getting started. Can you clarify by market cycle if you mean what videos in the market cycle? Yeah, that's a good point. So let's start with that. What I'm going to cover is I want everyone to watch videos 12 through at a minimum 13. These for sure, but that's probably what I'll cover. I'll probably just mainly cover the market cycle. So for sure, let's just say videos 12 for now, because there's a lot of information we got to cover from videos 12 to 12C. So I want everyone to start. This is the person's question. I want everyone to start with videos 12 to 12C. There's too many videos to cover in one session here. So I'm going to spend basically every week, I'm going to spend a whole week on market cycle, whole week on always in, maybe a couple of weeks. Trends, same thing. I'm going to spend a week on trends, maybe more. Breakouts, there's going to be, I don't know how many weeks we're going to spend on breakouts. This is going to be one of the most important pieces of trading. So there's just a lot to cover here. So I would expand as far as how long will this portion take? Make at least a month. But very good question. I want everyone to start with videos 12A to 12C. Again, if you don't have the video course, you're going to need the video course in order to participate in this month. You're going to need the video course in order to get the benefit. Are the webinars going to be really elementary? Not really. So what I'm planning on doing is, I am not the getting started session is there's not a lot to talk about the getting started session because the truth is if you can't figure out the getting started pieces, you're going to have a lot of trouble with all of this. So the getting started, I kind of see it as this is orientation. There's not a lot you're going to learn. You're just kind of getting an idea of everything that's going to happen. The real homework and the real work begins with the next session, the market cycle. So the reality is, I'm kind of expecting everybody to understand videos, pretty much all the getting started videos. We'll come back. I do want everyone to understand candle setups and signal bars. I will have a session over inside bars, over pullbacks and bar counting and gaps. But for the most part, as far as getting started goes, I pretty much expect everyone to already understand that. And I just wanted to start this in order so I could have time to explain what this coaching session is going to be. But as far as are these webinars going to be elementary? I wouldn't say so. What I really want to do is expand my thought process on, or Al's thought process on, what is the market cycle, make sure we understand it, and then how do we use the market cycle? How do we apply it to a chart? Why is the market cycle important? You will find all this information in the video course. Now, with that said, does anyone need these coaching sessions in order to figure it all out? They don't. But the difference is, what I have found and what I wish I had going back is, the video course is really great and really helpful in learning the information. It's about the best thing you can get. The next best thing would be having a classroom and actually getting to sit there and make sure and validate, do I actually understand what this video is teaching me? So when we talk about the market cycle videos, and let's just pull up the beginning section here. Next week, when we talk about the 4 parts to the market cycle, do I really understand what that means? Do I understand that all the parts are fractal, that smaller patterns make up larger patterns, that a strong breakout is a broad channel on a really small time frame, that a broad channel is, or maybe a tight channel is, a breakout on a higher time frame? Do I understand those pieces? That's what you're going to benefit from these webinars. And the other benefit, it's a little bit of a hidden one. By participating in these webinars, it's going to force you to watch the video course. One of the biggest problems I see with people is, there's some people that just never finish the video course. Then there's others that, they're 3/4 of the way there, and then they keep being 3/4 of the way there. In other words, I want people to get into the habit. Once a week, you're studying, you're watching the videos. So while you're trading and you're doing your other studies, you have an obligation to yourself to watch the video course, and you have an obligation to watch the market cycle. And the week after that, you're going to have an obligation to watch trends. The people that are going to get the most out of this are going to be the ones who participate, do the homework, and do exactly what's asked of them when it comes to the video course. What should non-profitable traders focus on? Major trend reversals, or high ones, low ones, buy low, sell high in a trading range? Yeah, so what should a trader start on when they're with the getting started portion? You should start with understanding major trend reversals, and we're going to cover that a lot in detail. Major trend reversals is one of the most important things to understand, because a major reversal implies bull trend to bear trend to bull trend. Minor reversals imply trading range. So that would be a very, very important topic to understand. Let's read through some more questions here. The trading room is completely separate to the course. Jim says, how do I eat the elephant? Bar videos 12 to 13. Should we watch 1 through 13? But honestly got sidetracked. Well, I mean, the reality is, again, let's just be simple. Let's just keep it really simple here. Today's Tuesday. You have 7 days to watch the market cycle videos. Now, in between those 7 days, if you want to go the extra mile, it'd probably be a great idea to spend 4 hours and 42 minutes, give or take, watching these videos. So the way I look at it is, I'd like everyone to watch the getting started videos. It's only basically 5 hours. Then 43 minutes, 27 minutes, 19 minutes. You're basically asking yourself to commit 7 hours over the next week. The primary thing, watch the market cycle videos. That's number one. Getting started videos. I would hope most of you have already seen these, but terminology, probably a good one to watch. Do you need to watch the Forex basics? Probably not unless you're trading Forex. My setup, we just explained that. Personality traits of a successful trader. That's a really, really good one to watch. If I had to pick one, I'd watch the market cycle videos because we're going to cover that next week. I really want people to watch the personality traits of successful traders doing stupid things here. Just starting out, great one there. So that would be what I'd really, really recommend. If I remember correctly, only 10% get past the getting started point. I wouldn't say 10% of people get past the getting started phase of the video course. But what I will say, just like any piece of education, a lot of people will sign up for something with zero intention of actually finishing. Now, what I want people to do is my hopes is with this class is those of you that are starting and getting started, I can help push you forward with studying because it's really easy to be totally overwhelmed. And I want to try and break down some of these pieces so we can learn bite sized pieces once a week and then we can move on. But as far as how many people get past the getting started point, I don't know. There's plenty of people, as crazy as it sounds, there's people that have bought the video course and complained that there was too many videos when it says before you buy the video course how many hours make up the video course. Those people, the reality is they're never going to finish it. They're never probably going to be a profitable trader. This video course is not just because you purchase, let's state the obvious. And this sounds silly to some of you, but just because you purchase the video course does not mean you're going to become a profitable trader. You have to purchase the video course and then you've got to actually apply the information. You've got to learn the information. Now, the benefits of the video course, with stating the obvious, is you're getting all of Al's information that he's learned through the years in one place. So if you do want to be a discretionary trader, great place to start. So let's read through some more questions here. Will the webinars be at this hour? Again, next week, I believe if everybody is to go, if everyone goes here and clicks go to Brooks price action. So let me remove myself here. Go to brookstradingcourse.com. Hard to see it, but I'm going to click on brookstradingcourse.com here. What I want everybody to do is when they get there, click around, click on the blog, explore for a minute. When you see want to keep in touch, click this link, add me to the mailing list. The mailing list is important because if you're subscribed to the mailing list, you will get notified when the next video is going to be. Tentatively, it's going to be next Tuesday, this same day, 7 days from now, at 4 p.m. Central, 5 p.m. Eastern Time. But go ahead and put your name, put your email in here so you get notified. Where do I purchase the video course? Great. That is a good question. You're going to purchase it right here, brookstradingcourse.com. So I just added it for everybody. That's where you're going to go. So let's read through some more questions here. And again, I'm not directly. There's people in the comments saying be wary of people showing you something that's never been that has never be wary of people trying to sell you something. That's totally true. And what I would challenge everybody, if you've never heard, I'm speaking to the people that I'm assuming have the video course. I know I'm speaking to those that also don't have the video course. Some of you have no idea who I even am or have never even listened to me before. And maybe some of y'all never listen now, which I find a little bit surprising because you're on his YouTube channel. But what I would say is this: do your due diligence. Go through the website, go through the blogs. There's information everywhere. So if we go to the learn the trade area, there's a lot of articles. What is price action? 6 aspects to consider. There's a how to trade manual. Some of this, I think half of the how to trade manual is just free for anybody. The other half, you have to be a member of the course to see. But there's a lot of information here that's relatively free. You can go back to really old blogs that Al's written from 2015, 2014. If you really want to do your due diligence, go back and read those. Pull up a chart of that same time period and see what Al had to say. So I'm totally for people doing their due diligence. Okay, so reading through some more questions. When does the video course go on sale? The video course is the same price as it is. I guess it's $399. I'll have to check. It might be a little cheaper than that, but if you click on the button, it says it's $399. And I believe I'm pretty sure there's like a 60-day. If you like it, if you don't like it, you can get a refund. But the reality is, it is what you expect. So here's what I would tell everybody: if you're going to buy the video course and you have zero intention of watching over 100 hours of videos, don't buy it. If you're going to buy the video course and watch it once, don't buy it. Now, if you are going to buy the video course, watch it several times. What I would basically say is this: I want someone, if you're going to buy the video course, I'd rather you spend 400 hours watching this video course than 10 hours. That's kind of the commitment you're going to have to this video course. The reason why this video course is long, and maybe one of these coaching sessions I'll pull up the book of Al's, but the reality is, for those of you who've never read Al's books, the book's about that thick. And I think it's about 400 pages, if I remember correctly. It's 400, 450 for volume 1. Volumes 2 and 3, there's another 400 pages. And it's all thick text. There's charts in there, but the reality is it's a lot of information. And it takes time to learn it. But if you're going to buy the video course, I would first make sure you're committed to watching it for a very long time. Okay, so let's find some more questions regarding I want to find some more questions regarding getting started. Do you cover traders' psychology in the course? So Richard, who operates a lot of the website, most of you know who he is. He covers a ton of things regarding the website and all the little pieces. He has a lot to say with psychology that'll be useful. And overall, what I would say is, as far as psychology goes, I'm kind of in the camp. I'm in Al's camp when it comes to psychology. Psychology has a time and a place for the markets. My biggest problem with psychology for most people is they see psychology as a replacement to studying. So, what do I mean by that? A lot of people, it's easy to write a book on psychology. It's easy to talk about psychology in the markets. And if I sit here and talk about psychology with trading, I could sound very intelligent with what I'm saying. But the reality is, most traders have a fear and they feel, you know, pent up inside and really bothered with what they're doing with trading. If we go back to some of these getting started videos down here, they have these emotions and fear and greed, and they get fearful with the markets. The market, there's nothing fearful about a market. A market's completely irrational. It's rational. It's buyers and sellers competing for a fair price. So what that means is what it comes down to is most people have problems with psychology because they do not understand trading. They don't understand how it works. However, once someone has spent several years studying trading, for example, let's look at yesterday. Yesterday's a great example. If you know you're in a small pullback trend and you shouldn't sell, and you keep selling and you just can't stop yourself from selling, that's a psychology barrier. That's a psychology issue. And you got to break that down. Forewarning, not everybody can be a trader. Some people, no matter how hard they study, there's going to be a psychological barrier that there's going to be something wrong with them that they can't figure out. The one thing I'll say is this to everybody: a few things as far as psychology, routines, everything. Number one, that I will say, if you want to go down this journey, you got to take care of yourself emotionally. That means you got to eat right, you got to work out, exercise, be as healthy as you can, to whatever that means to you. The way I think about psychology and trading, I do see psychology as important. I see if I have to be, if I'm going to do this and I'm going to go down this journey, I need to at least understand, I need to be emotionally okay with myself. I need to be a happy person. If I'm happy, my chances of being profitable will go up. If I'm very upset and miserable and I hate myself, my chances of being profitable go way, way down. If I'm emotionally upset with life, my chances go way, way down of being profitable. Same thing goes for if you have to make, if you're trading and you have to make money tomorrow in order to live, guess what? Your chances of being profitable go way, way down. You got to be in as Al Lee would call it, a zero state. Al, how does Al call it? He would say, you need to be at peace. Now, with that said, overall, it's different for everybody. But for me, I like running. That's one way that kind of helps me. Excuse me. That's one thing that helps me with being relatively calm. But overall, it's about studying. You got to study in order to really get over a lot of psychological barriers. Let's see here. Someone asked, can you discuss why you're starting this? Yeah, there's a few things. One, let me answer why. Why do I like writing the blogs, the trading room stuff? That's fun. And why do I want to do this? For one, it's really, really fun to talk about trading. Now, the downside with trading is I have a lot of friends. I can't talk about them. I can't talk trading to my friends because, as most of you have quickly learned, what am I going to do? Am I going to go see some of my friends over dinner and say, hey, did you see that wedge top that happened yesterday? Of course not. So there's not a lot of people. You'll learn that trading gets it's not it's lonely. There's it's you and the market. So one of the reasons why I want to do this is A, I really want to explain, I want to help with helping people better understand the video course. I know how daunting it is to study the video course. I understand how daunting it is to study Al's information. There were days, I remember there were Saturdays, many Saturdays, I'd be overwhelmed with the information and it would take me 2 hours to figure out how to study when I should have just picked up a chapter and just started reading or just should have watched a video rather than sitting there paralyzed over what to do. I was very fortunate to get to listen to Al in the trading room for I don't know how many days, but 6, 7 years, 2013. And when I say that, I mean, I watched Al every day from 2013 to over 2016. Every day he was in the room and I watched the recordings. And I was very fortunate to get to hear him for 6, 7, 8 hours a day when the market was open, basically to when it closed, and get to hear his viewpoints. And then I was fortunate to be able to study the video course with that. And I want to share that information. I want to help others, but selfishly as well, I like talking about trading and I want to talk more about trading. It's really fun to discuss this. It's fun to share thoughts, and I'm not going to get that. I can't share, like I said, I can't go to my friends over dinner and talk about a wedge top or a double bottom or a bull flag. And the reality is, even when you start, your friends start realizing and learning that you're trading, what will happen is they just ask you kind of nonsense questions, for lack of words. And it's not really a fun conversation. Just like for, if someone's talking to me about chemistry and they're really excited about chemistry, I'm going to hate the conversation because I just don't understand anything about chemistry. Okay, reading through some more questions here. Thanks, Callan, for the your viewpoints on everything. Nate says it took me 1 year to read the books. Yeah, and I commend you for doing it in a year. That's why I really recommend watch the video course first. I remember the first time I picked up one of Al's books, it took just forever to read 4 pages. And I didn't had it. I wasn't studying the video course at the time. I didn't understand the information that well. So I'd have to think, okay, what's a wedge? What's a double bottom? And when I started studying Al at 19, that was my first person I ever really studied from a trading standpoint. So I didn't all I knew when I started studying Al, I knew how to read a candlestick chart, but that's about it. So it took me there was a really, really big learning curve that I had to suffer that I had to deal with. But I would really recommend watch the videos first and then study the books. Okay, so I'm looking through for some more questions. Is anyone in the group age 60? There's plenty of people that are studying that are all sorts of ages. I've met uh, a while back. I met someone in Orlando who was 17 or 18 at the time. I believe they were 17. They were still in high school, and they were studying it with their dad. Okay, so I'm looking for more questions as far as getting started. And again, the other thing I would say for those of you when it comes to the market cycle, this week when you're watching the videos and you're studying the when you're watching the video course over the market cycle and you pull up the chart, really spend time thinking about the market cycle. Don't get stuck with the bars and thinking about the bar itself. Really take time to think through what's the market cycle? Are we in a trend or a trading range? Everything's going to, think about the market cycle. I'll give a little bit of a kind of teaser here for a second. So the market cycle is all going to come down to this discussion right here. It's a flow chart. We have a trend. We have a trading range. And when you have a trading range, it's either tight or broad. And if it is tight, we can really just sum it up as do nothing, broad, buy, upper one third, or excuse me, buy in the buy in the lower one third, sell in the upper one third. Trend, it's either a breakout or channel. Channel, it's either tight or broad. If it's broad, trade it like a trading range. In other words, go back to here. If it's a breakout, it's either weak or strong. Now, we can cover a lot with this. So why am I bringing this up? The entire video course is basically one large flow chart. Everything you need to know about a market cycle, it all comes back to this right here. That's the single most important question you ask. Is the market in a trend or is the market in a trading range? I'm going to talk a lot more about that next week, though. Best platform for beginners. I'm assuming you're talking about a brokerage platform. I'm really kind of, at most, I use TradeStation. I've been testing out some things on NinjaTrader. People use interactive brokers. Most are all really, just fine. I would just pick one pick one that's relatively known. So look up trading platforms. People use TradingView, interactive brokers. There's TradeStation, NinjaTrader. There's all sorts of them. How do we improve structuring trades and trade management better? Again, we got to learn to walk before we can run. We got to think through all these pieces. You improve trade management and structure by better understanding what you're doing in the market. How do you feel about using one of the funded trading platforms? Overall, I think it's kind of with anything. A funded trading platform, obviously, they're making a lot of money with paying fees. But with that said, assuming that they're honest and assuming that everyone gets paid, I have no issue with that. The biggest thing, I don't necessarily have I think it's a great test if you want to see if you can be consistent with doing something. But the problem I have a little bit with funded accounts, it's just like trading in general, is people start to all this, they want to jump steps. So in other words, they say, okay, this person, if I go here to this company, they're going to give me X dollars if I can just make this much money. Okay, I'm not going to study. I'm just going to, I've studied for a month. I think I can do this. I'm going to go spend all this money, get this funded account, even though I don't know what I'm doing, because maybe, who knows? It's kind of like a lottery ticket. Remember what Al said about a lottery ticket? It's a low probability thing. Then that's kind of what you're doing. Now, I have no issue with it if you've really studied and understood the information in the videos. But that's the same thing with, hey, I'm going to put my money in an account and just see what happens. So the reality is, the biggest thing I would do overall is spend time studying. Rose gives a longer discussion right there that might be beneficial. But overall, this is recorded. So again, next week, 5 o'clock Eastern time on the 9th, or not the 9th, the 16th of January, we'll meet back up here and we will discuss the market cycle in depth. So I'm looking for more questions here. Callan says they came across Al on the YouTube channel and they got a hold of the trading books, started studying the videos, and it's starting to make sense. They hope to be profitable in a year or two. Callan, I hope you are too. But the one thing I want you to know, I want to be the honest truth behind some of this and tell you it could take you longer than a year or two. But what I will tell you is this: those that I've seen who truly continue to put in the work and continue to study, those are the ones that see improvement. So if it takes you a year, takes you 2 years, who cares? If it takes you more years, who cares? You have to be committed to learning and figuring out this information, and that's what's going to get you to the other side. Yeah, I think Rose sums that up pretty well. As far as funded accounts, it's very costly. So make sure you know what you're doing first, and until then, trade simulated. So, some what are some tips on computer speed, etc.? Yeah, a few things. One, I would say, as far as equipment goes, do you need? I have a ZBook. It's a Core i7, I think 32 gigs RAM that I use to trade with, and I try and, like, for instance, this video, it's not on my trading computer, so I try and separate the. I have a trading computer for my trading computer. I have another computer for all the other stuff that I do, but overall, you don't need thousands and thousands of dollars of equipment. I like ZBooks because, and this is something that I gathered from someone I know who understands technology better than I do. But ZBooks, one of the reasons why I like them is, to my understanding, I forget what it's called, but if you do the research, they have a certain standard of hardware where it has to be certified and tested, and it's got to meet a certain requirement. In other words, they have a rigorous process for testing the hardware within it to make sure it's not faulty. But you can use, Dell, great computers, HP is a good computer. There's several choices. But overall, I think most people probably a Core i7 with 16 gigs RAM. But what I like to do, typically, what I do is typically around Black Friday, if I need, I'm always kind of thinking about technology. I need Black Friday, great time because usually computers get marked down, 40%. Great time to invest in a computer. Z books, what are they called? Sure, a Z book is just, let me do this. It's just an HP Z book. So if you go to, let me do this right here. I believe I think it's this one. So what I ended up doing is I bought a Core i7, but this was also in 2022. So I think I bought this one, no, it's a Fury. I bought an HP ZBook Power Core i7 for 32 gigs RAM, but also I bought it on Black Friday. But overall, there's plenty of other good computers too, so it's not like that's the only one out there. As far as monitors, so I have a really wide monitor in front of me, and I usually have it connected to two computers. That's why you see me look back and forth. So I look over here, I look over here. It's because it's two different computers. The streaming computer is actually to my right. My other computer controlling StreamYard is to my left. But I have a wide monitor just because I think it's convenient. Sometimes I split the monitor into two. Sometimes I just keep it in wide mode. But overall, you don't need a ton of monitors. Have you tried using Dr. Al's method on daily and weekly timeframes? Yeah, it works just fine. Please, can you give me some guidance? Well, we're going to talk more about that. What I would challenge you to say is what I would challenge you to think about is right over here, false beliefs. Do you have any false beliefs or possible beliefs that higher time frames don't work the same as lower time frames? That took me a long time. It took me a really long time to really believe that time frames all worked the same. So, for example, I started trading a lot of Forex. One of the most difficult challenges I had with Forex was I could look at the chart and understand what it's doing, and I got the logic. But when I took a trade, I'd be so impatient. I'd buy this bar and I couldn't hold on. It was just naturally, I was so used to trading a 5 minute chart that I thought to myself, I can't hang on to this bar. I don't want to hold the trade for several days. And what I learned was I had this internal belief that if the trade didn't work in an hour, it's a bad trade. When really it's a much higher time frame. So if I'm going to buy here, well, guess what? This whole thing's a breakout. It's at best a trading range. I can buy the close. I can scale in lower. I can get out here and then buy lower. But if I buy, scale in, maybe I get out break even on the entire trade. Maybe I hold. Market's always in long. So how did I correct that behavior? Print out a chart, throw it on PowerPoint, and start doing this. And one of the things I like to do is this right here. It used to bother me when Al would get rid of the time axis and price axis, but then I realized why he did it, and it all of a sudden started making sense. If you get rid of the time and price axis, you start focusing just on the bars themselves. So this, let's look at here, big bear bar, reversal, probably some kind of second leg trap. Now, the reason why I like doing this is it's really helpful. That's one of Al's charts. It's helpful to force you to study. Is it possible to use the webinar platform like the trading room as StreamYard's not very mobile friendly? Yeah, that's a possibility, and that's something we will consider in the future. Okay, so I'm going to answer probably one or two more questions, and then I will wrap this up. And I want to make sure, is everyone crystal clear as far as what I'm asking and expecting for next week when we study the market cycle? Because again, same time next week. So it's 6 p. It's 4 o'clock Central Time, 5 p.m. Eastern Time next Tuesday. I want everyone to have watched the market cycle videos. You get bonus points if you watched all the getting started videos. You can pat yourself on the back. Yeah, I mean, go ahead and get the course if you feel compelled and you feel like it's right for you, go for it. But again, spend time studying. I'm going to wait for a few more. Good. Everyone says it's clear. So next Tuesday, when we all meet up again and I talk about the market cycle, everybody's going to give me a thumbs up saying they've already watched it and they're good to go. So John asked, why use 81 bars per 5 minute ES RTH? I understand why that it used to be the case, but now it just seems completely arbitrary. Why not just use 9:30 to 4 p.m.? You know, you bring up a very valid point, John. And obviously, back in the day, when the E-mini actually did close at 3:15 Central Time or 4:15 Eastern Time. But right now, why not just use 9:30 to 4, so the same as the hours of the stock exchange? You could. The reality is the way I have it set for TradeStation, the bar ends at bar 81. If I was really going to trade if I was going to trade the Globex all hours of the day, if I was just going to hold, I'd probably just trade the ES. I'd just trade the Globex market. And for me, I've watched I'm used to the ES.D. And so it really doesn't bother me. But the longer you trade, the more I realize and the more I've learned that, okay, this big gap down, it's just no different than the market just selling off and then retesting the highs. So if it closes at 81, fine with me. Why don't I like it? Why not wait until, why not get rid of these three bars and create a session where it just ends at bar, 78? I could, but I'm not going to do that. Any reasons to use the matrix instead of other methods? Yeah. I've played around with NinjaTrader some recently just because I want to start learning about other platforms. And, I like the chart trader functionality where you can click and buy and just drag your orders. One of the reasons why I like a matrix is I don't like the orders showing up on my chart. So when I'm looking at a chart, I see my matrix and I can click buy, sell. I see my stop and my target. I've got other methods to make sure I don't have any orders in. But when I'm looking at a chart, I really just want the chart to show this. I don't want to see lines that show where my order is or my break even price because it's distracting. And I want to trade small enough where I'm just not worried about what I'm doing. I can just focus on this in front of me. Now, one of the things I also like to do, by the way, is when I'm studying, I'm always thinking about always in trading. So when I scroll really far to the left, I'm always thinking about what I'll do often is I'll just pick a time and I'll scroll and I'll just stop. And I'm going to kind of go a little further back just because I know what happened here. I remember this day. So I might go 100 days back. And I'm just going to randomly hold the screen down and just start from here. And I'll just scroll till the next open right here. There's the open. And I like to just walk through and think about what the day's doing. Okay, we gapped up, bear bar, maybe double top, bear bar, but wait for another bar. Now we have a bull bar. It's probably going to go sideways. Two legs down, probably going to form. We may have to test this high, maybe this high. Probably a bear leg in a trading range. Okay, now it's a trading range. We're not always in short yet. Maybe we are now. Strong bear bar at the moving average here, so we may bounce, but I want to wait for follow through. No follow through, but still may get a second leg down. For the bears, they're disappointed. I do it all the time, and it's just walking through a chart. And again, we'll talk more about that in the future. 12A through 15F, correct? No. We're going to go through 12A to 12C. I want everyone to start there. Now, if you want to put in extra effort and you want to study further down, that's great because we may talk further about some of these pieces during this, but at a minimum, I want everyone to watch 12A to 12C. And again, this is not, I'm going to watch it once, check the box. I did what Brad said. I'm done for the week. Again, you get exactly out of trading what you put in. So if you study a lot, you're going to get a bigger benefit. If you're just watching one video every few days and you're not really studying, you're going to get exactly that in your results. Do you know if Al or Dr. Brooks journaled trades? He did journal trades back in the day. He does not anymore, but journaling trades is a really, really good way. Excel is a really great benefit to jot down your trades. what I would do a lot, I still do it occasionally. Put your trades in Excel and categorize the day structure, what leg it's in. And what you can do is start marking which ones won and lost. Then you can start filtering, and you can start filtering and noticing, hey, every time I lose, it's a trading range day and it's buying at the top or selling at the bottom. Do I use the PM data at all? Not really if I'm just trading the E-mini, but I'll trade. I take plenty of trades in gold, and I will watch the Globex, especially when I'm writing the blog in the morning. So I may just pull up a crude oil chart and see what it's doing. And here, big bear bar, probably a second leg down, two legs down, testing support. We may go sideways here. Big bull bar, maybe buy below for a scalp. But I'll watch other markets. Okay, so I appreciate everybody taking 2 hours out of their day to listen to this. This video talked about the getting started videos. Now, remember, if there's one thing I really want to stress, getting started is kind of the fundamental is the basics of everything. It's it's kind of like you're going to start running, and your goal is to run a marathon, and you've never run a mile before. You just laced your tennis shoes and went outside. That's basically what we've done today. We have not started the real work. And what I want to stress with that is there's a lot to learn in the video course. And we're going to take it piece by piece. We're going to start with the market cycle, and then we're going to start with trend, something like trends, breakouts, channels, trading ranges. We're going to throw all those pieces together. But the most important thing is we have to learn the fundamentals in order to really understand everything else. So this is not a figure everything out in just 2 months. This is trading is work. Learning how to trade is a lot of work. Now, I remember there was Al. Al has a lot of great stories and analogies with trading. And in the trading room, several years ago, this is probably 2014, 2015, back when he was in the room, he mentioned there was a moment where he was talking about becoming a profitable trader. It's kind of like you just graduated from. He came from a medical background, so he always would talk about residency and all the things he had to do for his medical licenses. But he would say basically, you get you get your you go to college, then you go to med school, you get out of med school, all of a sudden you do your residency, and you're finally a doctor. But then once you do that, all of a sudden you finally have the license. You have the same credentials as everybody else, but you don't have the same skill level and experience as everybody else. So the point is to become good at something. It takes a lot of work to become really, really amazing, to be the LeBron James of basketball. So, or if you want to be the Al Brooks of trading, there's a lot of work involved with that, and it takes a very, very long time. Now you can become consistent. That is possible, but it's a lot of work. And if you put in the time and the effort and do it the right way, then your chances of achieving that go way, way up. So, thanks everybody for listening. To be really clear, one last time, next Tuesday, which is 7 days from today, which is going to be the 16th of January at 4 p.m. Central Time, 5 p.m. Eastern Time, we're going to review the market cycle. We're going to go bullet point by bullet point on the first 3 videos, and we're going to take it a step further in depth, and then we're going to have a Q&A over the market cycle. And then the next series, we'll talk about trends or breakouts. So everyone's homework that I'd really like people to do is to take time, watch the market cycle videos, write up questions you have about the market cycle, write up examples that you have in the market cycle. Down the road, it won't be in the next week or two, but we may start adding in reviewing some trades. So at the end of these sessions, we might we might take 15 minutes or so and review some trades that were submitted by individuals, and we'll discuss them at the end. So look for that. That might be sometime next month, but ideally, we'd give everyone the opportunity to send in by email their trades. We'll select a handful of them. We'll review them, talk about what they did right, talk about what they did wrong, and how they could improve. So I'm looking forward to seeing everybody next Tuesday, 4 p.m. Central Time, 5 p.m. Eastern. Remember, if you haven't done so yet, go to here. So go on the blog, click, go on the Brooks Trading Course website, click on the blog, click somewhere, click sign up now, or not sign up now, click here, click add me to the mailing list, and type your information in. That way you'll be notified on when any changes to the upcoming webinar. This has been recorded. So thanks again for listening and watching, and I will see everybody next Tuesday at 4 p.m. Central Time, 5 p.m. Eastern Time. And I'm really looking forward to this journey of us reviewing the video course and reviewing everything. Thanks everyone for watching.